All right, let's get to the jobs report today. It had payroll gains of 164,000, but as of late, economists have also been zoning in on wage growth. How is wage growth measured, though, and what does that tell us about the health of the economy at large? It is that time, folks. Time for Yahoo U. Brian Cheung is here with us with this week's lesson. Brian.
Hey, well, a fresh new jobs print this morning, which means it's time for Yahoo U. And today we're going to walk through wage growth, the kind of interesting part of the jobs report that links the jobs and the labor market with inflation, the two parts of the Fed's dual mandate of maximum employment and also stable prices. So let's unpack what we saw in the July report from this morning. This was the paragraph that described average hourly earnings. There's actually no mention of wage growth in the report. Again, average hourly earnings here. But what we saw was that non-farm payrolls rose by 8 cents to $27.98. That's a pretty good improvement over what wages were at in July of 2009, 10 years ago. That was $22 at the time. That has been an increase of 3.2% year over year if you're looking at July 2018 compared to July 2019. But what we're really interested in looking at is not necessarily the $27, but the year over year change over time, which brings us to our average hourly wages wage growth chart that shows you what it's looked like over the past 10 years or so. So you can see the report coming in this morning, 3.2% change year over year. We've seen a steady decline in wage growth basically since 2013. And this is reflecting also lower unemployment. So you don't see it on the chart here, but over the same amount of time since effectively 2013, the unemployment rate has declined from 7.5% to 3.7% as of the new print from this morning. So unemployment is getting tighter. Average hourly wages are going up. So more people being pulled into the labor market and being paid more at the same time. So that's all pretty good, right? Well, how does that mechanism really work? Because what I'm describing is what we call the Phillips Curve in economics, right? The idea that lower unemployment is associated with higher wage growth. So let's use an example. Again, we've used this in previous episodes. Cheung's Shoes, I am a manufacturer of sneakers, and I am paying Julie and Adam, who are my trusted workers who help me make these sneakers. I pay them $20 an hour for the time being. But keep in mind, unemployment is at 3.7%. It's hard to find workers in this tight labor market. My dear rival across the street, Heidi Cheung, colleague of ours here in the Yahoo Finance newsroom, she is making her own sneakers and she can't find workers, but she wants to try to take Adam and Julie away from me.
Yes.
She's offering them $25 an hour. They're going to make way more money if they run across the street. The only way I can retain my workers, knowing that it's going to be so hard to replace them, is if I just pay them more. So I need to bid them for a higher wage. I'll pay them $30 instead of $25 to try to make sure that Heidi doesn't take my beloved workers away from me. Now, what does this tell us on the macro scale? Well, wage inflation, this is the same chart that I showed you 2 slides ago. Again, it's been steady over time. But personal consumption expenditures, this is inflation at prices, right? How much you pay for things like your shoes or your sneakers and whatnot. This has been pretty steady over time, not really changing all that much over the past few years, even though wage growth has been going up. Now, why does this make sense? In theory, if I'm paying Julie and Adam more money, maybe they should go out and buy more things. If they buy more things, that should mean that there's more demand for it. So producers would want to push their prices up. But we haven't really seen that. Instead, inflation has been pretty stuck right below 2% here, even though it nudged up just slightly in 2018. But you do raise the question of why is this happening? Why is it that we're paying more people, but we're not seeing prices or consumption increase? This has been a conundrum for the Federal Reserve. And again, this is a problem that we really don't have an answer for and that economists are still trying to reason through. But anyway, that in a nutshell is wage growth. Again, fighting off Cheung's Shoes for the time being. You guys better not leave. I'm watching you.
We're gonna
I don't have the money on me.
We need some additional benefits.
Yeah.
You know, pool table,
We'll get you free lunch.
Snacks,
How about that?
I don't know.
Beer.
Plus you get to work for me.
Happy hour.
You get to work for me.
I bet Heidi would be a
Time
good
to
boss,
organize.
too.